You ask 100 people in the world, not your 10 crypto degens and natives, and you tell them, how do you express a DeFi trade? Like crypto taking over payments. What are they going to say? Aave or Ripple? Maker or Ripple? Ethereum or Ripple? What's a payment chain?
Yeah, Ripple.
Honestly, I've learned a lot about investing about like in crypto. Like can you distill? And I ask this question a lot to founders, like, what is a one-liner for your project? If you don't have a one-liner for your project, it's going to be really hard to capture attention.
This episode is brought to you by Skale, the next evolution in layer 1 blockchains. Explore the gas-free ecosystem at scale.space/ecosystem and follow their journey on X at Skale Network. Thanks to Skale for making today's episode possible. Hey guys, Jason here. Just to let you know, we have Permissionless 4 coming up in June from the 24th to the 26th at Industry City in Brooklyn. This is a conference for the developers and builders where we'll be focusing on the DeFi renaissance, applications, token design, and much more. Click the link in the show notes to grab your ticket today and use code EMPIRE10 for 10% off.
What up, everybody? Happy Friday, happy Saturday, happy Sunday if you're slow, happy Monday if you... I don't think people are listening to the Roundup by Monday. Santi, how we doing?
Who knows? Doing great, you know. Lot to talk about. I mean, it's amazing. I mean, we're heading into the summer. You know, who doesn't like summer? I guess if you're in the northern hemisphere. But no, a lot going on in crypto. I mean, last roundup we just went bang, like news article.
I think we'll have another. I think we got another bang roundup.
Totally. So let's just jump right into it.
Right in. Big news of the week. I got a haircut, looking like a child, but at least my chin bruise is gone. So you two steps forward, one step back,
Yeah. I was hoping you'd finally come through with our bet, which is you still have to shave your head. But
hey, what was that bet? What? It was a Twitter follower bet. Yeah, I don't remember making that actually. I don't remember. That's why we got contracts, man.
By the way, there's one guy, or there's a couple of folks in the Empire channel that like always DM me. It's like, when is Yano?
Dude, someone tweeted about it the other day. I was like, shh. We got to block. Yeah. I just started blocking people.
That's good, man.
Yeah. Let's talk markets first. So, and then, okay. So here's what I want to cover today. I want to talk about two interesting acquisitions: the Robinhood acquisition, and then Anchorage actually made an interesting acquisition of Mountain Protocol,
which we had on the pod with. Nick.
So his founder's name is Martin. We had him and Nick Carter on the podcast. They were like the first regulated yield bearing stablecoin, I think, if I remember correctly. So we'll talk about that. I want to talk about Coinbase added to the S&P, but also they had this breach. Public treasury companies, eToro IPO, meme coins are coming back with Believe. But maybe first we can just talk about the markets. So we just recorded this ETH podcast. ETH has had this God tier candle in the last week. It's up from kind of $1,500 range, $1,700 to up. What's ETH trading at right now? $2,500 roughly. Yeah, 25.65. Yeah. What's your sense of ETH right now? And did that podcast make you more bullish, less bullish? I'm just curious your sense on ETH right now. ETH in the whole, I'd call like the ETH ecosystem.
ETH or Ethereum, because there's two different things when we talk about like what am I bullish on? I've never been sort of super bearish on Ethereum as an ecosystem. There's many reasons to be excited about the developer community, the research that goes on, the thriving ecosystem. Companies continue to come to Ethereum. It has it's an important piece of the crypto ecosystem. So I've been very constructive there, especially now. I think the Ethereum community sort of like has a renewed sense of urgency that I think you're starting to see now, and we covered it a lot in the pod. I asked in the podcast, like, putting that aside, a lot of people talk about, there's been a lot of negative criticism of Ethereum. Like, can we just still agree that Ethereum is the second largest crypto asset? It is still a $300 billion asset. So like, how do we get to that valuation is a question that I'm going to continue to press every team, every founder that comes into this podcast. It's like, why is it worth 300 billion? Not just Ethereum, every other crypto project. And what do you need to believe for this to be 300 billion? And I think that is ultimately the question that I don't have a good answer to. So
I have a good answer to that. I think the only reason any of these things are valued at what they're valued at is the same reason OpenAI is valued at $80 billion, or whatever their last valuation was, which is OpenAI is not an $80 billion company today. It's that if you close your eyes and you can kind of squint, and if they get everything right over the next decade, that is all information will flow through ChatGPT, and boom, you've got $1 trillion company. And
I hear you.
300 billion.
I hear you. But again, it's like when you run a fundamental analysis, discounted cash flow. Go listen to the podcast I recorded with Jeff Dorman about Coinbase. Funny enough, Coinbase now got out of the S&P 500. We'll talk about it in this pod.
Actually, I'm going to be honest. I didn't listen to that episode. What was Jeff's take on Coinbase? Was he bullish or bearish?
He was like, look, bearish. I would say the product suite is not very integrated. It's going to be facing competitive threats from traditional financial institutions, and across different line items. The moat is not there. So, anyways, that was Jeff's take. Coinbase was at like $140, $150. Then it's now $250. Got out of S&P. Every manager now is buying it because they have to, right?
Yeah.
They can't afford not to have Coinbase and underperform the index. Nonetheless, when you I agree, ultimately you have to do a discounted cash flow. 10 years, what does this look like, and then terminal value to get to some semblance of evaluation.
That's not how you value a startup. Like, you invested in Blockworks. Did you build a discounted cash flow for us?
Yes. Like, did I model it out? I looked at the different pieces of your business and I say, okay, you have a lot of dependency on the event space. Do you believe that you can move away from that? And since I've invested, you've executed on a number of other line items that move away from one-time cyclical revenue source to a subscriber type. And ultimately, that was the bet that I made back then. I think you guys have executed on that. And so, are you going to model it to the nth decimal? But at least you have to have a reasonable understanding of how many users are using ChatGPT, what is the average revenue per user, and then how does that flow through the P&L, and what's the margin profile of the business. I continue to struggle with the Ethereum value, the ETH value accrual. And we don't have to spend too much time on that. And a lot of what we talk about is the L1, L2 dynamic and rent, and how does that accrue. We talk a lot about security being a very valuable piece here, and rent and whatnot. So anyways, it was a helpful episode. I still am not fully convinced on ETH being a $300 billion asset. I'm cautious. I'd rather, I see more opportunities in other parts of the ecosystem.
Okay, let me ask you this. So the market is starting to develop where, did you see this Believe app? It was called Clout, and then now it's called Believe.
It's $100 million in revenue.
Yeah. So, to me, this is just a different kind of spin on meme coins, obviously. So basically we had Pump.Fun, which was meme coins. We all called them meme coins and stuff like that. And then we had Zora come out on Base and ETH and Zora Chain, and they called them creator coins, but really they're just meme coins as well. And then we have Believe come out, and they're actually calling, I don't know if you've seen this, but what Believe is it gives you the ability, they're marketing it as hey, founders, don't go raise from VCs. They've kind of made the VC the enemy, and they're saying the way to fund your company is actually go launch a token. And this is just a different marketing spin on Pump.Fun and Zora. So Pump calls them meme coins, Zora calls them creator coins, Believe calls them founder coins. It's all the same thing. But it's got me asking the question of so the original cycle, right, in 2021 was Bitcoin, then you roll gains into ETH, and then it goes into altcoins, and then it went into NFTs. So I think a lot of people went into the cycle and they said it's going to be the same thing: Bitcoin, then into ETH and Sol, then into the alts, and then into NFTs or whatever. What actually happened is there were so many people who've been in the industry through 2021 that they just skipped all the middle steps and they went straight into NFTs, which this version of NFTs were meme coins, obviously. So we went straight from Bitcoin gains from the Bitcoin ETF in January of last year directly into the meme coins. So many people got hosed on that trade now and have lost so much money on meme coins. They made a lot, and now they've lost a lot because people didn't sell the top. That I think actually this resurgence in the market, Bitcoin's going up, ETH is going up, Sol's going up. I actually think this is when we could start to see a classic cycle, which is Bitcoin. You roll those gains into things like real revenue generating token, whatever the alts, I'll broadly call it alts or something like that. And then maybe later on we get memes. Curious what you think of that, or because the other side of that would be, look, go look at a chart of meme coins. Boom, we've got it on Blockworks Research. Memes are coming right back up, and everyone's just going to skip the alts again and go right into memes. How do you think?
I mean, let's. I always look at when the market rebounds, like what rebounds the fastest and hardest. Okay, so like that's always to me a strong signal of what the market wants to bid.
Okay,
and so like 7 days, like I'm looking at CoinGecko has pretty good categorization. So you have like smart contracting platforms, you have proof of work chains, proof of stake chains, World Liberty portfolio chain, so they bucket these things. I'm looking at like, memes, for instance. That bucket is up 34% over the last 7 days, outperforming
right here. So we've got WIF, Pi, Pepe, ETH, obviously.
They've rebound quite hard. Again, simplistically, it's a flows game. Like it doesn't like how much flows are required to move the price of an asset by 1%. For a very mature asset like Bitcoin and Ethereum, it is obviously harder. I'm saying obvious things, but it's just like, it's important to contextualize. Like it doesn't take that much capital to, that flows into particular lower cap market coins to double, right?
Yeah, but if we're being intellectually honest with that take, we've got WIF obviously is at the top. It's up 60% on the week, and Pepe is up 40%. But then you've got all the ETHs, right? Like WETH and ETH and wrapped ETH and Kelp, RS ETH, and all these ETHs. So then you have to scroll down a little bit. Then you've got Athena and Radium, which are, I would call, like fundamentally driven tokens. I don't know if you'd agree with that. Then you've got the L2s, which is like Optimism, Arbitrum. And then you've got like OG DeFi with Aave. Then you've got Hyperliquid, which I'd bucket in the same Radium Athena category. So it's actually not as clear to me what this is. I don't get a clear signal from this, but maybe you're seeing something I'm not.
Okay. Look, remember that time we talked about like what are the top 20 coins? Top 20 coins in crypto continue to be like legacy coins. They just have brand recognition and power, right? When investors, I don't pretend to understand all the pockets of flows in the crypto ecosystem. It's like really hard, I think, for me to like visualize. But like, for instance, Ripple, like no one was expecting that, and Ripple is now like a top 4 asset, right? Up from Solana and BNB. Where's that money coming from? Who's bidding this asset? Like Ripple is, a lot of the Cardano, Dogecoins of the world, like there's one like try to piece together like fundamentals. Do they matter? Like we'd have a whole intellectual discussion on that, and I would argue no, not so much. But of course, like for Hyperliquid, you have like a reasonably, and Maker and Aave, like the DeFi protocols, like you have a buy and burn mechanism that you had guys have put together a great research piece recently about like looking at buy and burn tokens and how the market has like rewarded them, like Maples of the world, right? So it's that whole category. The other simplistic arguments, like what are the main assets that how can people express views? And if you look at like what are the assets that are offered to people at the wallet aggregator level and exchange level, it matters, right? So naturally, like all the meme coins, are readily, easily like understood by the market and a lot of the retail participants. And so, when people feel that they want to put risk back on the menu, are you going to buy Solana or are you going to buy a levered exposure to Solana, which is perhaps WIF or Bonk?
Yeah.
Or are you going to buy Bitcoin or are you going to buy Dogecoin? And so I think like that's sort of how the market views it. When risk is back on the menu and on the table, people like to express levered bets, whether it's through a perp or options, but memes kind of do that. I'm not here to tell you that memes are dead. They're definitely not dead. They've been a core component of the crypto ecosystem since day one. Bitcoin is the ultimate meme.
So are you buying memes right now? Because we're going back.
I don't have time. Man.
Yeah.
Like,
all right, help me answer this.
I would have put on a trade of me, like WIF, for instance. Open up the chart of WIF. I think it went all the way down to 25 cents. When I looked, I'm like, this is like all the way down to 25 cents.
Yeah.
Liberation Day, right? It was like, I think the low there was like, so it would rebound really hard.
Right.
Again, it's $1 billion asset now. It traded all the way to 200 million, which is
Or we can look at the better meme coin. Which
the hot air rises kind of thing, right?
This episode is brought to you by Skale, the next evolution in layer 1 blockchains. With a gas-free, invisible user experience, instant finality, and robust security, Skale allows for limitless scalability and has already saved its 50 million users over $11 billion in gas fees. Scale's high throughput, zero transaction costs, and powerful Web3 infrastructure make it the ideal platform for gaming, AI, and other high throughput apps. To explore the gas-free ecosystem, visit scale.space/ecosystem and follow their journey on X at Skale Network. That's Scale spelt with a K. Thanks to Skale for making today's episode possible. I wanted to take a moment to tell you about Marinade, the platform connecting Solana holders with the best staking rates on Solana. Marinade unlocks a high-performance staking delegation platform that brings billions in liquidity and security to the Solana market. With solutions for both individual traders and global institutions from both DeFi and traditional finance, use Marinade to earn rewards on your Solana treasuries and holdings. Optimize your Solana staking with Marinade's best in-market features, including user downside protection through protected staking rewards, and optimized delegation via Marinade's automated auction marketplace. To learn more about Marinade, visit marinade.finance or click the link in the show notes.
So help me answer this question. I got a question from a friend. He said, "Look, I'm finalizing the sale of one of my houses. I'm going to dump that cash into the market. Here's what he said. He said, I'm going heavy into, or he said, going to go heavy soul memes, and then some real revenue generating projects like Radium, Jupe, Jito, Hype, and Athena. Anything else you love right now?" How do you answer a question like that? And I'm curious what you think of that actual basket. But
Well, what's his time horizon? Does he need that money? And what's his return profile? Like, what is he expecting to get out of that? Can he hold this for 10 years, 5 years, or 3 months, or 1 week?
yeah, let's say he's very risk on, very comfortable with risk, and has a multi-year time horizon.
I think Bitcoin deserves an important part in that portfolio, and I've come around to that actually as of late.
That's funny. That's what I said. I responded to him. I said, "Can never go wrong with a bit of BTC."
You can look at Bitcoin dominance, and maybe that comes down, but as a whole, I mean, I think there's a great chart going around like M2 and Bitcoin. Raoul Paul and a few other folks like not Eric, but I think the Bitwise guys, a couple of them tweeted about it, it is really, and we've talked about it here. It's sort of look at M2, and the correlation between M2 and the price of Bitcoin is actually quite strong. If you look at just, and so, yeah, like Bitcoin's great as an asset because you can do so much with it. You can borrow against it. The vol is, less than your altcoins. And so, it allows you to just build a little bit, dampen a little bit of vol and still capture. I mean, Bitcoin could be at 150,000, heck, could be at 200,000 by the end of the year. It wouldn't surprise me. And that's a great outcome, I think. I would argue like you put some in Bitcoin, some in gold. And then of those assets, I don't dislike. I would be curious how he would express the meme trade. Is he buying a basket of like the top memes? And what I've seen other really smart investors like, okay, pick your favorite meme in a particular ecosystem you feel excited about. Solana, Ethereum, Bitcoin, Pepe, Whiff, Bonk, and Fartcoin, whatever it is, right? I'm not here to these are all hypotheticals, right? None of this is advice or whatnot, but I think that's how normally a lot of people think, right? That what I like to think about is, say you have 100 people in a room. They all describe the scenario that you just described, which is they come across some liquidity and they want to put on risk. I think it's not so much like what do you believe? It's the Family Feud style of investing is how I would describe it. Family Feud, this game in America, right? For listeners that don't live in America or have been living under a rock, Family Feud, go watch it because the game is sort of like survey says, and they survey 100 or X amount of people. And so it's like, and they ask a bunch of questions, right? Like, whatever. What do people do on a first date? Right? What are the top 7 questions? And so how do you play this game to win? Not to be right. It's to win. Again, you're playing a game to win, not to be right. This is a classic CMS out there, probably listening. Do you want to be right or do you want to make money? And so that's what you need to anticipate is it's not the objectively right answer. It's like the social consensus. Yeah. What does the crowd think? And so that's the exercise, I think, for crypto, which is in the episode again with Jeff Torman. It's like, we came both to the agreement that a lot of value in these networks is the social currency. And because it is a social phenomena, then you just sort of like invert and you say, yeah, okay, so how do people, like, you could be sitting there all day saying Ripple has no value. It's a ghost chain, or Cardano. It's like, yeah, but that's how the masses, like, somehow Brad and team have like really developed this brand that Ripple is synonymous with DeFi. You ask 100 people in the world, not your 10 crypto degens and natives, and you tell them, how do you express a DeFi trade? Like crypto taking over payments. What are they going to say? Aave or Ripple? Maker or Ripple? Ethereum or Ripple? What's a payment chain?
Yeah. Ripple.
Honestly, I've learned a lot about investing about like in crypto. Like, you can you distill, and I ask this question a lot to founders, like, what is a one-liner for your project? If you don't have a one-liner for your project, it's going to be really hard to capture attention.
Yeah. Let me ask one more markets question, then we can move into the news because there's a lot of it. I tweeted this out. Got just attacked by the Bitcoin army here. I said Bitcoin dominance calling the top at 65%. We're currently so we've been on a multi-year since actually the end of 2022. Basically since like FTX blew up, we've just been on a multi-year uptrend for Bitcoin dominance. And we just hit 65%. I said that's the top. 65%, calling the top, Bitcoin dominance. Today it's at 63%. I don't know if you have thoughts on this one.
Again, yeah, I think I sort of agree with your take. Normally what it happens is, so you saw like a pretty big rally here of Bitcoin dominance, and Bitcoin, usually when there's a relief rally, a rebound, Bitcoin leads and then everything else follows, insofar as Bitcoin is stabilized. So if Bitcoin holds, it typically goes, and you'll hear a lot of these traders say, like, if Bitcoin holds this level of like 100K, then it's breathing room for other things to rip. And so naturally dominance comes down.
Yeah.
That's historically how the pattern has sort of behaved. But
yeah, cool.
I, at the end of the day, like, I would characterize FOMO is always been ever present in crypto, because you hear stories about people making life-changing money with Fartcoin or whatever. And so it's always this is already ripped. So I missed Ethereum train because it's a $300 billion asset. Then, Solana is at 90 billion. Oh, wait, this Avalanche is at 10. Oh, wait, this project in these ecosystem is at 1. Oh, wait, there's another ecosystem at 100 million. Oh, wait, there's another at 10. There's another 1. And then you keep going down that path.
Yeah.
And then you sort of like say, okay, how many people are going to allocate to these things? And of course, there's some truth into like the narratives of AI and, memes and particular sectors within memes. Like, so it's just, it's, I will say it's hard to, objectively speaking, like, it's very hard to outperform Bitcoin, Ethereum, and the majors over a multiple cycle, like, period. Some of the best investors, some of the best funds that are actively doing this 24/7 have teams doing this, struggle to outperform.
Yep. Yeah. All right, let's get into the news. A lot of news. First piece of news is 2 acquisitions. We had Robinhood acquired WonderFi. We had Anchorage is acquiring Mountain Protocol. So Mountain Protocol we've had on the podcast. We mentioned earlier Martin. We did that episode with Nick Carter. I think Multicoin, and they'd raised an $8 million Series A. Multicoin, Castle Island Ventures, obviously. They were innovators in the sense that they wanted to, their idea was that you could actually have a stablecoin with native yield baked into it, which, as we're seeing more and more and more, that's already happening. This is a pretty interesting acquisition because, so they're actually, I don't know if you followed this acquisition at all, but so Mountain has USDM is their stablecoin. It got to like 150 million market cap, and then now was trading down at like 50 million or something like that. USDM is actually being wound down as part of the integration. So I originally tweeted out, "Oh, this is interesting. We've got this nationally or federally chartered bank with Anchorage, and now they're going to have a stablecoin. That's very interesting." I was wrong about that. USDM is actually going to be wound down as part of the integration because they need to comply with the Genius and Stablecoin Acts. So this isn't Anchorage getting a stablecoin. What this is Anchorage is now the first OCC crypto bank that can help other institutions issue stables. So as Anchorage now tries to go head to head with the State Streets and BNY Mellons of the world as this big custodian, they need to layer. Being a custodian is actually a pretty crappy business model. You need to layer other services on top. So the service that this acquisition gives them is the ability to help institutions issue stables, and you'll see it in this line. Or maybe it was in their tweet. Basically, everybody's going to have a stable coin in their mind, or at least a stable coin strategy. So yeah, I thought this was a pretty smart acquisition.
What does their business model, I guess, look like over the next year or two with this acquisition?
I think they basically just start layering. So the first thing that a custodian needs to do, right, is so they all started with being a custodian, and then everybody, whether it's BitGo or Coinbase custody or Gemini's custody business or Zappo or Copper, whoever it is, they all started as custodians. Then they started layering trading services on top of that. So they all started launching the ability to trade on top of the crypto that you had custodied with them. Then they offered the ability to borrow and lend against it. So I think Anchorage today has one of the biggest lending desks in the industry. And now as that becomes a product that other people, that becomes really competitive, you need to offer more and more and more services. So, stable coins are obviously at the heart of the industry today. So I think it's a pretty good service. I like it. I thought this was a good acquisition.
Yep.
All right. The other one that's interesting is Robinhood acquiring WonderFi. This one, there's probably a little more meat on the bones to talk about. I thought this was a brilliant acquisition for 5 reasons. One is regulatory fast lane. Robinhood just bought the only crypto platform in Canada with full CIRO approval and CIPF insurance. Basically, for those not familiar with the Canadian licensing space, which I assume is most listeners, they just skipped this like multi-year regulatory nightmare. They bought a compliance engine that other people can't replicate, and they basically skipped this like regulatory nightmare trying to get the licenses. And so that's number one, regulatory fast lane. Number two, and by the way, I've got a lot of this from Simon Taylor. So just big shout out to Simon, who's just very good fintech guy. Second is instant Canadian footprint. So WonderFi has 1.7 million KYC'd Canadian users. They've got a couple billion in trading volume, 1.5 billion in custody. So they've got the staff to run a big, Robinhood Canada, basically, let's call it. So they get almost 2 million KYC'd Canadian users. That's big. 3 is Canada actually has clearer crypto regulations than the US right now in some aspects. So this actually gives Robinhood the ability to, like, if you think about, we were talking about this with talking about Deribit, this actually gives Robinhood this interesting sandbox to kind of test like derivatives trading and perps and staking products and cross-border trading solutions. And it right now, if they didn't do this acquisition, they would have had to wait for the SEC to give them approval to do all this. Now they can go do this in Canada. By the way, I'm not a lawyer, so I don't actually fully know what I'm talking about, but this is my guess. Number 4 is they can now layer on all of the existing Robinhood things on top of their Canadian products, like their X1 credit card and zero commission trading and all the classic stuff. And then number 5 is, as Simon said, this is a competitive chess move, right? So they are basically paid a 40% premium to keep WonderFi away from, there's 5 big Canadian banks. There are other US crypto exchanges that were, looking north, probably like Coinbase and folks like that. Wealthsimple is the Canadian equivalent of Robinhood. So by doing this, you're basically saying, look, all the competitors can't have this business. So I love it. I think it was great. I thought it was smart. I don't know if you have any thoughts on this acquisition, but
No, I just love to see the M&A activity in crypto pick up so much. I mean, I think we're pretty early in our predictions. I think not this year, but last year we talked about we even speculated that Coinbase might be acquired by big bank. And at the time, Coinbase stock was trading at $25. Now it's 10x that. So someone missed an opportunity to buy Coinbase. So yeah, I mean, it's pretty impressive. The question is, what gets bought next? Like, who do you think is up? Like, who I guess who do you think is the major?
So the
companies
number
that
one
you think
M&A that's happening right now are actually it's a little boring, but the number one thing that's happening is exchange license acquisitions. So there are a million. I mean, basically, what happened for the last 5 years, or for 2017, let's call it 2016 to 2023, let's call it, where you could actually, it wasn't that hard to go get a license. This could be anywhere from in Singapore to Malaysia to Indonesia to Mexico to Argentina. Like, think of all these countries around the world. You could go get a license. Around 2 years ago, after everything blew up, all these countries stopped giving licenses. So you have a lot of countries around the world, whether it's Canada to Brazil to the Netherlands, where there's like one or two exchanges that have become dominant and they've got the licenses. So now if someone like Coinbase wants to push into that area, or Robinhood wants to push into that area, you're going to have to go through like a 2 or 3 or 4 year regulatory hurdle to just break in and start trading crypto. All those companies are going to get gobbled up because they own it's really a licensing acquisition play is what it comes down to. So
yeah, absolutely.
What do you think? Anything that's kind of a boring play though, because like exchange acquiring exchange. Any other more interesting things that you think will happen? Inversion acquiring something.
No. Listen, I heard you. I can't talk about inversion too much in this pod. Like I hear you. No, Circle is probably one where might be acquired. I don't know if it actually gets acquired or not, but I could see them potentially be acquired.
Yeah. The obvious one is data companies. Okay, so I mean, this is just the world that we play in. So I've got kind of a unique insight into it, which is there's all these data businesses. So there's kind of the big player. So there's like the data companies that most people know. Then there's this basically like 50 data companies in the industry that let's say they didn't raise any money, or they raised somewhere between like 20 to $60 million. And they actually have amazing data in like one little area. Like they've got the best derivatives data, or the best staking data, or the best hyperliquid data, or something like that, or the best Aptos data. And they've got like 2 engineers and a product person and a founder, or something like that. And they've been able, a lot of them are maybe have 500 million of ARR, or excuse me, 500,000 of ARR, a million of ARR, 2 million of ARR, but they're more like a feature, less like a company.
Right.
And basically all of them are selling right now.
Do you think there's any protocol to protocol M&A happening, or could be happening?
Not good. There's not good protocol to protocol. I think.
When's the last time we saw that? I mean, it was.
Well, there's a Synthetics was looking.
Yeah, that's what I was thinking about.
Synthetics and the
Lyra.
trading.
Lyra, which was Lyra. It used to be called Lyra.
Yeah, whatever it's this one. So this was yesterday. Synthetics proposes $27 million token swap to acquire options protocol Derive. Synthetics contributors have proposed acquiring Derive, formerly Lyra, via an SNX for DRV token swap. So there's deals like that, but like those are less interesting. I think what ends up being really interesting is, look, some of these companies or some of these foundations and protocols are sitting on billions of dollars, literally billions of dollars, and they're not doing anything with that money. They're literally they're staking it and they're getting a little yield.
This episode is brought to you by Skale, the next evolution in layer 1 blockchains. With a gas-free, invisible user experience, instant finality, and robust security, Skale allows for limitless scalability and has already saved its 50 million users over $11 billion in gas fees. Scale's high throughput, zero transaction costs, and powerful Web3 infrastructure make it the ideal platform for gaming, AI, and other high throughput apps. To explore the gas-free ecosystem, visit scale.space/ecosystem and follow their journey on X at Skale Network. That's Skale spelt with a K. Thanks to Skale for making today's episode possible. I wanted to take a moment to tell you about Marinade, the platform connecting Solana holders with the best staking rates on Solana. Marinade unlocks a high-performance staking delegation platform that brings billions in liquidity and security to the Solana market. With solutions for both individual traders and global institutions from both DeFi and traditional finance, use Marinade to earn rewards on your Solana treasuries and holdings. Optimize your Solana staking with Marinade's best in-market features, including user downside protection through protected staking rewards, and optimized delegation via Marinade's automated auction marketplace. To learn more about Marinade, visit marinade.finance or click the link in the show notes.
So I heard this week I had a meeting with someone's really involved in the Rootstock community. They have like 2,000 Bitcoin in cold storage. Ladies and gentlemen, $2 billion sitting in cold storage, not earning 5% on treasury. It's like, you know what I'm talking about? It's like, what are you going to do? Yeah. What are you doing with that capital? Now, I think like if I were, here's what I would buy. Where do you think most of the value accrues in the stack?
I don't know. I don't know.
User aggregators. Go buy a wallet. Argent, ladies and gentlemen.
Yeah.
What's Argent doing? They built some really cool tech. It's not going public. Probably has, at this point, 10 years of investors sitting there. Probably some of them want liquidity.
Yeah.
If you're a protocol, you want users. Well, there's a lot of users, people using Argent.
Yeah.
If you're a protocol, I mean, that to me feels like a pretty interesting acquisition.
Yeah.
We spend a lot of time looking at like fintechs, like traditional fintechs that just have gone nowhere in places.
So that's what I think will start to happen is what's a fintech? I don't know, Acorns. Like what happened to Acorns?
Yeah, Betterment, Acorns. There's a myriad of fintechs in Latin America that we have in our short list of companies that we're looking at and poking around. I just read Coinbase. JP Morgan just put together I just got their just note on Coinbase. This is like the analyst there. Kenneth Worthington, and they just had like
Worthington, hell of a name.
Worthington,
born to work on Wall Street.
Yeah. So he, Coinbase, he's like they're neutral on coin. Anyways, like they're like TMC conference takeaways, and they hosted Coinbase president Emil Choi and the CFO. They had some really interesting like topics. 4 main topics. One, legislation, which clearing up. The derivatives and payments, obviously the derivative acquisition. They talk about the competitive landscape. To listen to this, competitive landscape presents opportunity to white label. I was like, white label? What do you mean white label? Coin. They're like, coin is uniquely positioned to withstand most competition as legacy crypto participants have been honing, broadening, diversifying its products. Their whole point is Coinbase currently provides 200 partners technical support and infrastructure to engage with the crypto ecosystem. And so I think they think, and this is the first time I hear this term, crypto as a service, CAS offering is notable. And they think of like Coinbase acting as quote acting as a principal in the industry.
JP Morgan wants to go launch crypto. They'll just be like, hey, Coinbase, you got everything. You got the licenses. Yeah.
It is the first, but not the last time. And powerful terminology like this could, really spark some interest. So crypto as a service. Obviously the internet had software as a service.
Kevin Worthington. Let's go, buddy.
Coming on. Yeah. Like kudos to them for this is the first time hearing it, so I'll give them credit for it. I'm going to start using this. I've been using crypto enabled businesses.
Do you want to hear a great marketing line? One of our research analysts posted on Twitter. He said, "Access to Blockworks research dashboard gives me data privilege." He's like, you didn't know that SolFi was gaining DEX market share on Solana, or that Radium's Launchpad hit record volumes, or that Ethereum reclaimed DA market share, or that app revenue on Aptos just reached an all-time high. Sorry, I thought this was common knowledge. I've got data privilege.
Whoa, that's powerful right there.
That's a stud line. All right. So one more note on this line about the protocols having so much money. I thought there's a post by Dean Eigenman that I thought was spot on, which is he said if there was proper activist investor in this space, companies like Golem Network, TBT. Right, wouldn't be sitting on 100,000 ETH. That's not $100,000 worth of ETH. That's 100,000 ETH, while having a $270 million FDV. Would have been a no-brainer target before the pump. So 100,000 ETH, math. I think that's 250 million. 250 million, and their FDV is 270 million FDV. Yeah.
Well, so this is something that I want to talk about, right? Because we're gonna have an episode with Parify and a few other folks talk about like the strategy of the day is taking a public company and like injecting one crypto asset.
Yeah.
Exactly. So everyone's now doing this. You have the Soul Strategies of the world and
There's
few
like 20
others.
of these things launching right now.
20 of this now, which is they're trying to basically do what MicroStrategy has done. Which
you take
is,
a holding company, you seed it with 10 to 20 million, you reverse merge it into a public shell company,
and the market's giving you're going to trade at 2, 3, maybe 4 times NAV.
Right.
For now, I would be cautious for now. It's like at some point that the classic Charlie Mungers of the world come out and say, "Hey, yeah, this goes away." For everyone that remembers the Widow trade, which is the GBTC grayscale trade, where you're doing effectively this. But it's interesting, right? Because you have in the public markets, you have this dynamic where these holding companies are trading at a premium, pretty substantial one. On the other hand, you have golems of the world that are trading at 1-to-1 NAV, right? Golem has 250 million of ETH in their balance sheet, and they are trading at right now. Let's see, just to make sure that, 278. So it's basically 1-to-1. So you're assuming there's no value to Golem and what they've done. Basically, it's like a holding company of sorts. Why is it not trading at a premium? Because again, they're not probably doing anything without Ethereum, right? They're not, recursive. They're not.
Kevin Owaki said they're building Octant app, and my response would be, you need $250 million to go build an app, please.
I mean, yeah, that's something that I've paid.
You'd get sued by investors if Blockworks raised $250 million and we were just building a little app, and I mean, we would probably get sued.
I mean, wait, listen, Berkshire Hathaway has $300 billion in cash or something like that. So the question is are you a steward of capital? What is the purpose of Golem? And so the incentives are kind of not there, right? If you're the Golem team, you're kind of probably putting some of that ETH and buying treasuries, and you're clipping 5% on 250 million. Well, that's pretty substantial amount if you ask me.
Yeah.
So they're basically, a dormant hedge fund of sorts that is clipping a 5% management fee. They're doing things correctly. Now they're earning anywhere between at most 12.5 million by putting this on treasuries.
Yeah. And by the way, where did they get that 100K ETH from?
The ICO.
Investors gave it to them. Yeah, exactly. Investors.
Yeah, but okay. SAFs are nice receipts of thank you for your money. Here's a receipt that you gave us this money. There's very few investor rights attached to that.
Yeah, true.
Of course, you could corner buy Golem and
that's a SAFT, not let alone going on Ether wallet in 2017 and just signing up for an ICO.
Yeah. To be fair, if you're sitting on 250 million of ETH, you can't put all that in treasuries. You could borrow against it and put some, maybe at best they're clocking 5-6%. Half of that you could diversify or allocate correctly. But yeah, there's by the way, it's not just Golem. It's so many other companies.
No, I know. Can we talk a little more about this pipe strategy, or basically these public treasuries that are happening, and just your thoughts on them? So there was one that was so David Bailey and Bitcoin native. Oh, they merged. Oh, that's interesting.
Mm-hmm.
Yeah. Okay, this is the pipe. This is the exact same thing I'm talking about. So David Bailey and Bitcoin native holding company Nakamoto announced merger with Kindly MD to establish Bitcoin treasury. So this is the exact thing that I'm talking about. You get a holding company and then you reverse merge the thing into a shell company. So raises $510 million pipe, 200 million in convertible notes, making this the largest capital raise to launch a Bitcoin treasury, the largest pipe for any public crypto related transaction. And so really what they're doing is they're just buying Bitcoin. They're just creating another Bitcoin MicroStrategy. Same thing happened here. This was Spets announces strategic partnership with Sonic Labs ahead of closing their current financing round. So Spets is pleased to announce a strategic collaboration with Sonic Labs, the core development team behind the Sonic blockchain. As part of this collaboration, Sonic Labs will be making a direct investment into Spets, the parent company of Sonic's strategy. All this is saying is you've got a holding company that's going to be a publicly listed company now, where their only thing that they're doing is buy the token, market the token. And you put in place, very key to this strategy is you hire a mini Michael Saylor, and you market the hell out of that token.
Yep.
How does this end?
I don't know. I mean,
am I just mid curving this and I'm just like, risky, and left curve, right curve, or like just buy the token and be okay with it?
I don't think that the premium is sustainable. It's a function of, I think, of a couple of things as I try to understand it. There are some parallels, I think, between the Grayscale premium. For a refresher, there was a time where the only kind of way to express a long crypto view was to either buy and store crypto, and many institutions didn't want to do that. The only alternative in the market was going by GBTC products, and they had some tax advantages, and you could put it in your 401k, and so there's like a lot of benefits to that. It had a convenience factor, therefore it traded at a big premium, and the premium like kind of moved around quite a bit. That eventually went away, right? Like it's sort of like financial engineering. Now, the question is like, it's not perfectly comparable, but like, why does MicroStrategy trade at a premium? And I think we discussed this in certain episodes with Bitwise folks. What is it? What's his name? I forget,
Matt?
but Jack?
Matt?
Or Jeff? Jeff. I think it was Jeff.
Oh yeah, from Bitwise?
Yeah, Jeff from Bitwise, and we had another guy in the pod, and we talked about this. So, but their whole point was like MicroStrategy is basically borrowing against its Bitcoin in a very friendly way. And like the way to go levered long an asset like Bitcoin is best expressed via MicroStrategy because they have muscle and they have negotiated really interesting terms with creditors and whatnot. And like, fine. I've actually been impressed like that what's a premium now, MicroStrategy? I forget. But I was a bit worried when options of course, the Bitcoin ETF launch and the premium was still there. And so it's like, okay, what's going on? And then, all right, if you want to go lever long Bitcoin through traditional markets, you could you could use options and a whole suite of products that are not as fully robust out there. But I think like over time, like basically there's a levered long vehicles, right? If you want to express a levered long view on a particular asset, what they'll do, and my understanding of Sol strategy is they'll take Sol and then they'll stake it and then they'll earn that. And then, that's investors get excited about that versus holding, an ETH ETF, for instance, or whatever. So I honestly don't understand. And maybe I'm a left curve here or middle curving it. Sorry. But I don't know. I don't want to play. I guess what is the worst case that can happen for these companies? It goes back to like trading 1-to-1 NAV, right?
Yeah.
Maybe there's some creative way to like hedge that. Like you sell puts or something like that.
Yeah.
I don't know. I personally feel more comfortable holding an asset that I like and just being plain vanilla.
Yeah. Well, it'll be, so there's like 20 of these things coming out for all these different tokens, which you can probably imagine what the tokens are, and it'll be interesting to see what happens with them and if they're able to successfully do it.
Is there one for Ethereum, by the way? And if there isn't, why not?
I don't know. Maybe because the Ethereum ETF exists. So it's like, why is Sol Strategies valuable? It's like, it gives institutional capital access to Solana before the Solana ETF.
Yeah. But what is interesting though is that you have these vehicles for Bitcoin.
No, I know. I actually don't. I don't.
You have for Ethereum, for Solana, but I haven't. Correct me if I'm wrong. I haven't seen one for Ethereum.
Maybe
it's kind of strange.
Ethereum should get on it.
Earlier in today's episode, I mentioned Ledger's latest products, the Stacks and Flex, and I wanted to take a few seconds to tell you more about them. These wallets feature the world's first secure touchscreens, which don't just simplify your digital transactions, but also keep them extremely safe. These wallets are virtually impenetrable to online attacks because they store your private key in a secure offline chip. You can manage more than 5,500 tokens and install up to 100 apps. Choose the most trusted name in hardware wallets and take control of your digital security today at ledger.com or hit the link in the description of today's episode to check out their latest wallets. Hey everyone, Jason here. Earlier in today's episode, you heard me mention the weekly CIO memo from Bitwise. In an industry as hectic, fast, and complex as ours, it's incredibly hard to get an easy, no-nonsense stream of what's actually moving crypto. The memo comes from Matt Hogan, Bitwise's Chief Investment Officer. He's been on the show before, and he has this amazing ability to take the most complex topics and break them down with clarity. Trust me on this one, the Bitwise Weekly CIO memo is really worth the 5 minutes of your time. Check it out at bitwiseinvestments.com/CIO memo/empire, or just hit the link in the description of today's episode to get started. Carefully consider the extreme risks associated with crypto before investing.
All right, last thing I want to touch on is eToro. The eToro IPO happened. They got out, and it was successful. They're trading at like $6 billion. So first off, I do want to give a massive congrats to Yoni, just the founder of eToro, because he has been running that business for almost 20 years. They founded eToro in 2006 or 2007. So for anyone who's built a business and has done it for more than a couple of years, it is a grind. And yeah, so big shout out to Yoni for building eToro for going on 20 years. I think it's 18 or 19 years here. So yeah, big shout out to Yoni. It also more publicly traded companies that are related to crypto is amazing for the industry. First off, it gives these crypto companies or crypto related, I would call eToro crypto adjacent, the same bucket as Robinhood. It gives them access to the capital markets, which is only going to further accelerate M&A, which accelerates venture, which it's just very healthy for the whole industry. And then it also gives more pricing, right? So if you actually talk to late stage investors or bankers who price IPOs, nobody knows how to price something like a Fireblocks or something like a Chainalysis or something like an Anchorage. So it's very tough, or even something like a Kraken, by the way, because they only have one company to comp it against, which is Coinbase. So the more crypto-related companies that go public, the more we get to price these companies. And so it's very, very, very helpful. And it'll actually it'll just help the IPO markets and the late stage venture markets, which have been incredibly dry as of late. So eToro did roughly I think it's 900 million in revenue, 800 or 900 million in revenue last year. Adjusted EBITDA was about 300 million. So they're trading at like 6 times revenue, 20 times EBITDA. I think I got that right. Crypto trading accounts for like almost 50% of the revenue now. So just more pricing is very helpful. So congrats to eToro. That's what I'd say.
Yeah,
I don't know if you have any thoughts on that.
No, really good. I definitely agree with you on the point around like you could start seeing a crypto basket, right? And it helps pricing for future companies. It also paves the way for more IPOs. It's just gonna be really interesting how Coinbase trades and what multiple, what premium relative to other things that are, to your point, crypto adjacent or in the space, like Robinhoods of the world, Nubanks of the world, stuff like that, PayPal maybe. One interesting thing is we haven't talked about here. I referenced earlier, but Coinbase, obviously, one of the more probably impactful things that happened was Coinbase got added to the S&P 500.
I thought you were going to say Coinbase got hacked.
That too, or their employees got bribed. There's an interesting
element.
But
Coinbase got added to the S&P. First crypto company added to the S&P. It's massive. It's massive.
It truly is. I mean, the stock kind of like went from it's just gained roughly, what is it? Like it's now at 247. It was like sub 200.
It's a 40%.
Yeah. People ask me like, why? Why is this so important? Because now if you're a large institution, like you need to rebalance your portfolio, because the name of the game in institutional management is, can you outperform the index? So you cannot afford to hold stuff that, you want to like if you want to outperform the index, most managers just scramble to buy stuff that gets added to the index, right? And so you have new flows coming in, and still Coinbase is still trading 40% off its high of 340ish 345, which happened like end of last year. But still, I mean, it's a pretty important milestone. And of course, everyone comes out and says that Coinbase is definitely not. I mean, there's just more, to your point, there's just more awareness, more coverage of Coinbase now that it is in the S&P 500, right? There's just more eyes on it, more visibility, more managers have to get exposure to it. All these 401ks have exposure to it. So point, super, super important for the industry. My prediction or question to you is, and there should be a poly market for this, is like, when do we have a second crypto native company added to the S&P 500? How much more time does it take?
I think a few years. I mean, because
Years.
you should
What's
be
like the contender for it?
when's the next? Let's start here. When's the next crypto native company that's going to IPO? Is it right? Kraken,
Not a dozen. Like, yeah, probably
Circle,
Kraken, Circle, but TBD.
BitGo, Anchorage, like, so first we got to get a crypto native company to IPO, and then we can talk about that. So I think it'll be a couple of years actually. So this is it's huge.
The other metric that I'd be really curious, in a perfect world, you guys are data guys, but like, of the S&P 500, which businesses derive revenue from crypto in some way, shape, or form? Maybe in a version where Stripe and their business becomes far more crypto stablecoin, like derived.
I mean, dude, have you seen the S&P? Have you looked recently at what's in the S&P?
Yes.
My computer's like my computer's
like
glitching out. It's like
the Max 7 are like what, 40% of the S&P.
Yeah. But like, I mean, let me read these to you. Tell me if you've heard of any of these. Ecolab. This isn't even number 400. This is 150. Ecolab, AutoZone. Well, no, AutoZone. Roper, Air Products and Chemicals, Regeneron Pharmaceuticals, CSX Corporation, The Travelers Company, Carrier Global, Freeport McMorman, Newmont Corporation, Copart, Norfolk Southern Corporation, Truist, Wannock, NXP Semiconductors, Kinder Morgan,
insurance.
So
oil and gas, commodities, oil and gas. A lot of tech. Like, go to the top 100.
Then there's, I mean, you obviously know these: Microsoft,
pharma,
Nvidia,
pharma and tech and financial services, basically some healthcare.
Yeah, soon to be crypto data.
It would be interesting. Maybe you don't have like a pure crypto native company join the S&P in near term, but I would argue a lot of these businesses are going to start using stable coins, whether they
I agree.
Like it or, you know what I mean? And so like it would be really interesting if in a perfect world you have like the revenue or profitability of the top of the S&P 500. What percentage of that starts being derived because of like crypto line items?
Here's a different way to think about it. When does the Coin 50, which is Coinbase's index product, which I think is just going to end up taking over, when does the Coin 50 become as important of an index product as the S&P 500?
Fair enough. Yeah. I think that takes a while, sir. As much as bullish as I want to be.
I got two more things. One is there's a Bloomberg article: Morgan Stanley digital assets head quits to start new DeFi fund. I've become pretty close with Andrew Peel, who's he's the guy. He's the head of digital assets at Morgan Stanley. He just left to start his fund to invest in and issue digital assets and tokenized assets. That's not just the story, though. The story is that there's a lot of these folks leaving traditional capital markets to get into crypto, right? So you had Andrew just left Morgan Stanley. You had Tony McLaughlin. Tony basically created Citi's regulated liability network. He just left to start. It's like Ubix, I think it is, UBYX, and they're building clearing infrastructure for stablecoins. You had Caroline Butler, who was running crypto at BNY Mellon for a while. She left. You had Jay Biancarmano, who was the head of crypto at State Street. He left. He's at Platonic now. So you've got all these heads of crypto.
Someone at Goldman may have left to join some startup.
Someone
called Inversion.
Called Inversion. Yeah, great first hire. So
she's actually on garden leave. We haven't been public about it, but yeah, it's happening soon.
Yeah, is it public? Are we talking about? No,
not public yet. Yeah, but it will be soon. I want to talk about something else.
Okay,
Maple Story, pretty interesting.
Is this the Avalanche? Is this the thing that just went live on Avalanche? I also wanted to talk about this. This is so they are trading at like $3.5 billion.
Yeah, trading at. But the more interesting thing to me, like putting price aside, it's like they've been around for more than 20 years. It's like a pretty cool game. They have 100 million registered users. The company is like $3 billion in revenue, and they launch an Avalanche. I think like talk about like resurgence of narratives. Like Game 5 was like all the rage when like Axie happened. But again, it was like, was it a fun game? And I think like MapleStory is one of those, like, to me, it's like it's a reminder of like, you're going to see more. Like, I think the gaming narrative is not dead. I think we're starting to see like Gonzillas of the world and MapleStories, which is pretty, like, you should be paying attention to this narrative is all I'm saying.
Yeah.
These are actually fun games.
Look at this Haseeb tweet. Wow, MapleStory with a huge launch day on Avalanche. What a flashback. Used to play this game as a kid. So
I did too.
This is a real, this is a real bit. This is a real game, real business.
It's a real business. It has a ton of users.
What a concept.
We're gonna have these guys on the pod.
Are we?
I just added you to the group, like, because I asked Luigi, hey, like, can we get these guys on the pod? Because I want to hear what did they see as the benefit of launching a chain, right? Because I think like this is like, it's not a crypto game. It's just a fun game with crypto elements.
Yeah, here's this Luigi tweet. MapleStory is a free-to-play game which has been around for more than 20 years, over 180 million registered users, 3 billion in gross revenue. It's trading at 3.1 billion.
Yeah. So we're going to have these guys on to talk about like, what was their thinking of launching a chain? Like what is it actually the benefit for the gamer? And I think it's like, we're going to see more and more of that, real businesses coming to the conclusion that like they can layer in some crypto elements to like enhance their value prop to users. And I think that's really powerful. It's not like never lead with crypto, lead with a good product and then like have crypto kind of like embedded in there. But 100%. It's really exciting.
All right, sir, let's wrap. What are we consuming? What's the content of the week?
Oh, well, I've been reading a lot. Shout out to this person I hired actually from Goldman. She recommended this book, The Surrender Experiment. Have you read it?
No.
Story Mickey Singer. Really awesome. Honestly, like one of those books that just of like,
what's it called?
I think The Surrender Experiment. Yeah, The Surrender Experiment. But my journey into life's perfection. And I thought it was going to be one of those like guru, like Deepak Chopra kind of books, but it's actually like just a.
Who's it by?
Really refreshing. Michael Singer, Mickey Singer.
Huh. I don't know who that is.
Yeah, no, honestly, I mean, it's a pretty. I really enjoyed it, and just go read it.
Have you surrendered?
I will be lying if I didn't tell you that throughout the day, I now repeat this word, surrender. And most of the time you come to the conclusion, it's like surrender can have a negative connotation, which is like you give up. You like throw in the towel. But the way that he comes at it is like surrender to what life brings at you. And I've like, for me, it's like oftentimes, so I'll tell you for me, like, I usually don't like to ask for help. That's just like, just not what I do. Like I rarely ask people for favors. I like to help others, but but I do come across a lot of people inbounds that like, hey, we want to help you in X or Y or Z. And I'm like, you know what? I'm going to start paying more attention to that. Like, because there is something good that comes out of that. So how many times have I deprived myself of that happening? And I think there's a lot of magic that can happen when you just surrender to that. Someone comes across your life. And all I'm saying is after reading this book, I've started to pay more attention to these people that come into my life. And, a lot of times there's a lot of noise in there, but every once in a while, to your point, like some of your best hires came around an inbound on a DM on Twitter. That's what he talks about surrendering, like actually paying attention to those people that come into your life. And for me, obviously it's important because I'm on a new journey and a lot of people reached out and I've just started to pay more attention to that. Whereas before I'd have been like, listen, I just got to like heads down, build. But I think I've become a bit more aware to these travelers that come into your life and giving it a shot of like, hey, like I'm going to pay attention to this. Maybe some good comes out of that. You just never know. It's perhaps oftentimes because there's a lot of noise, I've tended to discount a lot certain random strangers that come in. It's like, as opposed to being skeptical or having your guard up, I think there is value in just opening up to people.
Interesting. All right. That was very
What is your content of the week?
Philosophical. I have something that's way less philosophical than that.
You're like White Lotus.
Yeah, White Lotus was good. I actually didn't like it. No, not that good. No, I listened to, so there's a podcast actually called My First Million hosted by one of my friends, this guy Sam Parr, and then another guy, Sean Puri. I'm sure there's some crossover with Empire listeners. I'm sure some Empire listeners will know it. There's actually two really good episodes for founders on it. So I got kind of burnt out of the Founders podcast just because I can't stand David Senra telling me why you should be listening to the Founders podcast for like the thousandth time. It's like, this is why we listen to the Founders. I'm like, I get it. You already got me. I'm listening. So I stopped listening to the show.
People might say like, why do you have ads on Empire?
Yeah. Hey. But there's 2 good episodes. That one is with Blake Scholl, who started this supersonic jet company called Boom.
Oh, I'm an investor.
So that was an epic episode. With Blake Scholl, and then there's another one with the founder of NFX, the venture firm.
Yeah.
And that was called from making the clickbait title, from making $6 a week selling worms to making 110 million. So ignore the clickbaity title, but it was a really good episode about like here's the philosophical part to maybe tie this into what you were saying, is like, he talks about he's like, look, I run in the circle of like Elon, and he's like, I was on a friendly basis with Steve Jobs and all this kind of stuff, and he's like, what game do you want to be playing? Like, do you want to be playing the game of like buying boring businesses and cash flowing? Do you want to be like world domination game and be on Elon's level? And he's like, you got to kind of understand the game that you're trying to play. So but then he talks about for 90 minutes just about the power of network effects and how network effects go beyond just your business, and they tie into your life and network. His mental model for the world is network effects are at the center of everything. So I thought those 2 episodes were good.
That was great. One point on that, as you were saying that, there's a really good tweet by Mark Andreessen that I really like, and it goes, I'll quote, "The world is a very malleable place. If you know what you want and you go for it with maximum energy and drive and passion, the world will often reconfigure itself around you much more quickly and easily than you would have thought."
That is a play on a Steve Jobs quote. That is not a Mark Andreessen quote. So Steve Jobs said, life can be so much broader once you discover one simple fact, which is that everything around you that you call life was made up by people who are no smarter than you. And you can change it, you can influence it, and you can build your own things that other people can use. And I think that Mark's tweet is good. I think it's a play on that Steve thing. Anyways,
and Steve was a play on someone else's, probably Socrates or
you're not allowed to steal anything in life.
Or Marcus Aurelius or something. Like, we're all standing on the shoulders of giants.
I did watch Gladiator 2 on a flight. That was my fun content play of the week.
I didn't like it as much.
Yeah, it was good for an airplane movie.
But Gladiator 1 is the OG.
Anyways, folks, good roundup. I hope you guys enjoyed. Always good hanging with you guys. We have the ETH Bull podcast coming out on Monday.
Okay.
Podcast, and then the week after on Monday, we've got a really, really, really good episode about treasuries, this whole like token treasury public company strategy, with someone who's actually in the middle of it all, plus someone who's looked at a ton of those deals. So yeah, 2 really good episodes of Empire coming.
Rock and roll. Well, have a good weekend, everyone. Thanks for listening. Yano, good haircut. Maybe shave your head next time.
Cheers, folks.